Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. The new week is ready to start and we will discuss the situation on the euro currency. Start as usual from the daily time frame, but in the beginning of the week I suggest you to visit our forum and read weekly and monthly analysis as well, since there are some important moments have happened on the, especially on the weekly time frame, that allows us to say that probably the bearish momentum is still strong, and the one thing that we should watch for on the lower time frames and on the daily time frame as well is to enter on the short side of the market. We need to see and watch for some patterns and how we will in general could join with the downward move. On the daily time frame we see that market has shown this retracement to the upside to the 136 area, so and probably this retracement is close to an end. That retracement was triggered by completing of this A, B, C, D pattern. So market has hit some resistance from that swing, 3.8 resistance approximately. Well, now returns right back. Well, the major hour task is to watch for particular patterns and how we could join for the potential move to the downside. Also, we'll discuss some risks that are linked with that potential retracement that lasts for the recent free trading sessions. On the daily time frame, we see that trend is now bearish. The next target is around 132.42 area and 132 area. It's right here. That target is from that pattern, A, B, C top, 100% extension. 1618 is from that recent ABCD, A, B, C top, 1618 target. Well, let's take a look on the 4-hour time frame. On the 4-hour time frame, as you remember, on Friday we discussed this potential triangle, and we said that probably this is, from the classical point of view, this is the continuation pattern, and market could continue move to the downside. But from the other point of view, market is very cunning, and especially on intraday charts, and market makers would like to grab stops that newbie traders has placed above this trend line, above the previous highs, since they try to trade these patterns as classical approach suggests. So here you can see that market has reached that area, grabbed the stops that has been placed above that highs, reaching the 50% resistance of that swing to the downside. Okay, particular. Also, that's some kind of confluence resistance that market has reached from that high to that low 3.8 retracement, and from that high to that low 6.18 retracement. Okay, so now what we see on the 4-hour time frame, trend is still bearish, but here we see the pattern that is the bearish engulfing pattern right at the 50% resistance, and we could say that probably this is the wash and rinse, since market just hit the stops above that highs, has shown the failure breakout of the triangle, and has returned right back. This is the potential bearish signal. Also, we could say that probably market has accomplished the stop grabber pattern that we have discussed on Thursday with that bar, when here market has shown the failure trend shifting, and we said that probably market could take out that highs. So that has happened, although with some delay. Now, this pattern in general gives us a lot of advantages, since it allows us to enter on the short side of the market based only on itself, based only on that pattern. Because if market will take out that highs and continue move to the upside, it will break this area of resistance, it will erase its patterns, and in this case we will have to be prepared for the continuation of the upward move. If market will show some retracement of that swing to the downside of that bar and hold inside that bar, then probably we could say that market will continue to move to the downside. Since all trends are bearish on the monthly, weekly and daily time frame, well, and let's take a look on the 4-hour time frame to see what particular we could do on Monday with that particular pattern. First of all, I would like to show you some patterns. The more recent one is this nice crab. It's butterfly sale with a 1618 extension target completing this right here. You can see the strong plunge down after the completing of that point. Also, there is another butterfly sale pattern that we have discussed on Friday. It's that one. Okay, the left wing, right wing. 127 target stands a bit lower, somewhere around that area of that butterfly. Well, now you can see that market has shown really nice plunge down. What we could see here, first of all, take a look at this red line. This is the MACD predict indicator. It shows that hourly trend now is bearish, and it will remain bearish till that area, 135.68, the 618 resistance from that swing down. Well, since we would like to enter on the short side of the market, we do not want to see the hourly trend will return to the bullish side again. Well, from that perspective, there are two levels that are suitable for entering the short side of the market. The first is this agreement, 618 target with a 135.40 area of Fib resistance from that pattern, A, B, C, bottom, 618 target, and 135.53 area is the completion of that ABCD pattern that will give us Gartlett's 222 pattern. That is also approximately 50% resistance of that swing to the downside. Well, theoretically, we should place stops somewhere above the highs. This is corresponding with the rules of trading butterfly pattern. Also, this is corresponding with the trading of the engulfing patterns. But take a look at this ABCD pattern. The 1618 target stands right here, 135.81, and that is above the break-even point for the trend. Also, that blue dash line is 135.76, is the weekly pivot point for the coming week. If market will move above these areas, then probably we could count on some continuation to the upward. That's why you also could think about placing stop just above that area. So the choice is up to you. Both stops are logical. You could place stop above that high, or you could place stop above just this target and weekly pivot point. Although in general this picture looks pretty bearish, and almost we could say that's very clear, because a lot of different patterns and market behavior now tells us that probably bearish bias is very strong. I just want to warn you about one possibility. Take a look at the 4-hour time frame. Remember that pattern that we have discussed some days ago, A, B, C bottom. The 1618 target hasn't been hit yet, and it stands at 136.30 area approximately, somewhere right here. Market has not quite reached it. So we can't exclude the possibility that market will intend to punish the wisest traders and still could show some splash to the upside, hitting of that ABCD 1618 target. In that case, very probable that market initially will reach the deep target of that swing down, and it could realized by the forming of another butterfly cell. This will be left wing, then market could show some retracement down and accelerate further. The 127 extension of that retracement on the 4-hour time frame tells a bit higher than 136.30 area. So it's very probable that market will show some butterfly sell in that area, and only after that will show move to the downside. So the first sign that probably this could happen is the deep retracement inside of that swing. If you will see that market will reach 135.80 area, this will be the first thing that should worry you, and this will be the sign that the probability of further continuation to the upside and hitting of 136.30 areas becomes more probable. If market will stop upward move somewhere around that area or that area and then turns to the downside and take out that low, this will tell us that probably market is ready for continuation move to the downside, and retracement due to the daily ABCD pattern is over. So be very extra careful with dealing with that, trading with that environment on the hourly time frame. Well, since we expect that market should show some retracement to the downside, at least from that area, this will let you to close your trade at the break-even if you, for instance, enter in that area or that area. So if when market will start move to the downside, you could enter in the break-even. If you entered somewhere from that area to the downside, that will allow you to place stop to the break-even. So be very careful and diligent in the placing of the stop losses, and track the price action behavior on Monday with that retracement, since it's very tricky currently. So that's been said, we have discussed all possibilities that could happen on Monday. In Monday trading sessions, very tricky and not so simple to analyze it. Well, but we have appointed the major possibilities that could appear, and be very careful. Watch for the clear signals, watch for the patterns and areas that we have discussed, and control your risk, and you should get the significant confidence before the entry in any trade.